we all understand the type of climate that we're dealing with. We're dealing with multiple offer situations.
I'd love to know sort of what's your why? What makes you tick? Why are you so successful?
Have a dialogue with your lawyer. Have a dialogue with your agent.
Both sort of passionate about sort of what we do.
Again, vet your agent to make sure that they're experienced and they're local. I like that idea.
No excuse to miss it on Saturdays from 8 to 9.
That's right.
WBZ.
And now, the show that gives you the latest and most relevant housing market news. Real Estate Radio Boston with financial expert Rick Shearer and legal professional Ali Alavi.
Tell us a little bit more about that.
Yeah, property appreciated rates come down, but if you still don't have that 20%, I would say there's about 40% of mortgage lenders out there that don't offer a program called lender-paid mortgage insurance.
Okay,
so maybe
what is that?
It was just never an option for you. Lender-paid mortgage insurance is the ability to up your interest rate by a little bit, maybe an eighth, quarter, 3/8, depending on what your loan-to-value is, okay, and have it paid inside your interest rate and not as a line item on your bill. So if you went to a credit union or a big bank or a bank, chances are you're paying monthly PMI. And depending on your income, it may or may not be tax deductible. So what we've been doing is taking clients who might be in an FHA loan or might have monthly PMI, and we're refinancing them, bringing the interest rate down, but also getting rid of that $150, $200. I just got rid of someone's $475 PMI payment.
Wow.
So, so people that have PMI, it might be a good idea to have it dropped. If you have an FHA loan over the last couple of years, you're paying a very high PMI. FHA just reduced their PMI factor down by 0.5%. So could save you an additional $100 a month just by, even if you're in the same interest rate, $100 a month just by dropping the PMI to a certain factor. So
just pick up the phone, call 855-4ASK-RICK. I mean, it doesn't cost you a thing to be able to have him analyze your scenario. He's either going to tell you, yeah, it makes sense, and you're going to save a few bucks, and it's not going to cost you anything because it's all the closing costs are essentially covered by you, right?
Right. We do no points, no closing costs. And guys, listen, I had a client call me the other day, and we were saving them over $200 a month, and they go, you know what? I'm going to wait till rates go to 3%.
That just makes no sense.
I'm just going to wait. You're going to be waiting a long time because I don't necessarily, in my professional opinion, don't think that they're going to go down that low. So if rates go up to 5% for the next 3 years, that's, do the math. What's 3 times $300 a month times 12 months? I mean, it's a lot of money they're leaving on the table. So, if you can save $50, $100, $200, $300 a month at no closing costs, it's sort of a no-brainer.
Well, the Lispan is something that happens very quickly. So you're in a situation where buyer and seller entered into agreement. For whatever reason, the seller has decided that he or she isn't going to go forward with the agreement. So what the buyer can do is file a lawsuit, and that's what you're actually doing. You are filing a lawsuit. You go into court. As long as your complaint sets forth a claim to a right to title to real estate, the judge must give you what's called a memorandum of lis pendens, and that's just a piece of paper that you then take and you go and you record it in the registry of deeds, and it puts a cloud on the title. And as a practical matter, no buyer is going to come along and buy that property with that cloud on title.
Right, and so you're sort of speaking about what a buyer can do for not performing. One of the things, and let's talk about the buyer side. Let's say the buyer moves forward and doesn't says, I don't want to buy this property right before closing. Those remedies are pretty easy, right? Because what happens at purchase and sale is the buyer is giving 5% of the down payment to be held in escrow. It gives it to the seller's either counsel or seller's real estate agent. If they don't come to terms, they can just take that 5% and walk away.
That's right. They can. They can take the P&S provides that the seller can keep the deposit. But that's not the seller's only remedy. The seller can also file a lawsuit and seek to specifically perform the contract. Real estate deals is one of those types of contracts where you can actually go into court, and it's an equitable remedy. You don't necessarily get it, but you can go into court and you can ask the judge to make the other party specifically perform the contract. So if the buyer walks, the seller can keep the deposit and also go into court and ask the judge to make the buyer buy. Now, as a practical matter, how do you make somebody buy something if they don't have the money to do it? Right. But that is one of your remedies. What typically happens is the seller will just take the deposit, put the property back on the market, and move on.
What we will recommend a lot of times is say, instead of paying that annual premium, the minimum that you need to put in there, what if you could afford to put more? Save $10,000 a year, and then build up cash value, potentially use that for supplemental retirement income. Right.
So the additional premium that you would, and it's all depending on whatever income that they may have and with their affordability, how much they want to set aside. It's almost a forced savings scenario that they're setting aside that money. That money is being technically invested by the insurance company to see some sort of a growth. You're getting a guaranteed return, right, on an annual basis. Is that correct?
Yep.
And then it has a cash value after a certain period?
Correct. Yep. Whole life policies do have a guaranteed cash value buildup. There are other policies look more or less like a 401k where you're saving and the investor takes on the risk. Okay, I own a variable universal. I want to put my money in the market and I'll pick the funds to choose from.
Okay.
So, and then everything in between.
And would you be able to borrow the money down the road against the money that you've made a contribution of? And how is that structured?
You can do that. They have policy loan features built into those policies. Typically what we're building for investors that are using it, like what I think you're talking about, let's build that cash value up, and then in retirement, just take withdrawals out of the policy. So you're not taking loans, you're not paying loan charges when you're doing that.
Gotcha. So increase the cash value and then use it as a means to supplement the income that you lost because now you're retired.
Yep. We're just simply overfunding the policy. We call it superfunding the policy to build the cash value.
What a great segment. There's a lot of information that George went over. And again, we only have 10 minutes in the segment to get it all out. And so he went quick. But what I want to do is, let's just talk about Mike Abramo for a second. January is really the time where everybody should be putting their financial house in order. And I know I talk to clients, week in and week out, and they're self-proclaimed messes. They're just.
I'll be honest with you. I mean, I know you say January, and we've been saying January. I mean, we're now in February. But, I'd say the first quarter of every year should be spent in taking a look at your financial house, putting your financial house in order. We'll talk to it a little bit later on in the segment. Yes, we keep talking about the fact that the interest rates are coming down. They've been low,
right,
and they should refinance. So, but they should be looking at their overall financial picture. And I think Mike Abramo has an unbelievable ability of being able to put together this entire picture, telling you where your deficiencies are, where you're over leveraged, you're not, how you should diversify, and identify the requisite vehicles for you.